Well, hello and welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Tuesday morning, news coming out of global markets are fairly tepid this morning, and the GIFT Nifty also hinting at another muted session for the Indian market. Muted but volatile, that was the session yesterday, and looks like today as well we are poised to see a volatile and muted session. But of course, over the next 30 minutes, we'll be talking about a lot of stocks that will be in focus. We'll also be dissecting whether or not an ailing airline like SpiceJet can revive a dead airline like Go First or not. We'll be touching base with an expert view on whether or not this acquisition, if it comes through, makes any sense for SpiceJet at the current juncture. Aside of that, lots of stocks in focus, including the likes of Vedanta, Apollo Tyres. We'll be taking stock of that, and of course, we'll be answering all your stock-related queries. We'll try and take them up with our technical expert on the show. So if you have any queries, keep them coming on our YouTube feed, and we'll try and take them up. But of course, before we move any further, let's take a look at the top headlines at this hour. Stocks resume rally on Wall Street as optimism remains high following the Fed's dovish pivot. The Nasdaq leads gains with the S&P 500 as well, just about 1% away from its lifetime highs. All the indices, mind you, are on track for 3 to 5% kind of gains for the month of December. Asian markets kickstart the day on a weak footing. Investors await Bank of Japan's final rate decision for 2023. Meanwhile, the GIFT Nifty is indicating a flat start for the Indian market. Oil rises nearly 2% to about $78 a barrel. Attacks by Houthis on ships in the Red Sea in response to the Israel-Hamas war raises fears of supply disruptions. The United States has announced a 10-nation Red Sea coalition to prevent further attacks. And among stocks in focus today, watch out for ONGC, RIL and Oil India as government slashes windfall tax to 1,300 rupees per ton vis-a-vis 5,000 rupees per ton earlier. Vedanta declares its second interim dividend of the year at 11 rupees a share, while its board will also mull a fundraising today. And sources say that Warburg Pincus affiliate White Iris Investment may sell 3% stake in Apollo Tyres via a block deal. Well, without any delay, let me bring on board Sacchitanand Uttekar, who's the Vice President Research, Derivatives and Technicals at TradeBulls Securities, to take stock of the technicals and, of course, where the Nifty is headed from here. Great to have you on the show, Sacchitanand. Yesterday, we saw the bulls cooling their heels a bit. We were fairly muted by the time we ended trade, and GIFT Nifty today is hinting at another muted start. Would you say that, we are likely to be range-bound today as well, or do you think, we could see some bit of a resumption in the upward move? What are the charts suggesting?
Good morning, Nandita. Clearly, yesterday we saw a doji kind of formation, an inside bar formation, and plus, Nifty failed to surpass its previous, day swing high, which was around 21,495. So I think clearly, these are good, healthy signs of consolidation here. If you look at the overall movement, Nifty already had a very strong rally. Since last 31 days, it has been maintaining its tail above its 5-day exponential moving average. And if you look at the recent rally itself, the prices have started trending further away from the 5-day exponential moving average. So I think a consolidation or a corrective is something that would be necessary from here on. If you look at the placement of this 5-day exponential average, which is placed around 21,240, I think Nifty has some good meaningful support out there. So probably we may see some pause to consolidation, and this particular consolidation may also get extended into a correction. But we are not expecting Nifty to drop below the 21,100 mark. I think there is a good durable support base which has been built. So any corrective towards this particular level would be a good, healthy, welcoming sign for the overall health of this particular trend. So as of now, I think if we look at specifically today's data, unless Nifty is trending below that 21,500 mark, the expectation would be that it could see slippages towards 21,240. And on the lower side, probably one can take some contra bets on a decline, keeping a stop loss somewhere close to around 21,140 on a closing basis. Eventually, we see this particular mark of 21,500 getting breached, but for the day, I think this particular resistance would stay, and we may see some slippages on the lower side.
All right, there could be some slippages on the lower side, and of course, watch out for the levels that Sacchitanand just mentioned. But Sacchitanand, before I bring on my next guest, I want to get your thoughts on an Apollo Tyres. That's the stock of the day for me, given the fact that we are likely to see a block deal in the counter, 3% stake likely to change hands at market open, and the floor price has been set at somewhere around 440 rupees per share, which is at a discount of 2% for at the compared to the current price. We have a query also coming in on our live feed. Funny PG wants to know whether it's a fresh buy at the current juncture. What would you advise him to do, and what are the levels you'll be watching out for Apollo Tyres in the next couple of sessions?
So the stock is very well trending within a secular bull run, and we have recently seen a very strong recovery from the base at around 380. There are good signs of an impulse which is established, and the correction or the consolidation that we saw from the levels of around 470 towards 440. I think this correction was healthy. So I think it's a good time wherein the stock can be accumulated, even if it drops down to 440 levels. I think that will be a good zone wherein the stock can be considered from an aggressive positioning perspective. On the higher side, it has been forming a good sequence of bullish flags, which is again a continuation pattern. So the indications are very good. In case if we see the stock scaling towards 440 or declining towards 440, it will be a good healthy opportunity again. Eventually, we may see this particular stock scaling towards 520. So I think for a positional target of 520, one can accumulate. You can keep a stop loss somewhere close to around 422 on a weekly closing basis.
All right, that's the view on Apollo Tyres. I hope that answers your query, Funny. But hold that thought, Sacchitanand. We'll talk about specific stocks and more stocks once we touch base with you once again. But let me also bring on board Dhiraj Mathur, who's a retired IAS independent director and aviation expert and former partner PwC, as well as leader of Aero and Defence practice. Great to have you on the show, Dhiraj. Yesterday we saw that, there was a news flow, in fact, report-based news that SpiceJet has thrown its hat in the ring when it comes to showing interest for Go First, along with other two players, right? But given the fact that SpiceJet has its own fair share of financial issues, do you think an ailing carrier like SpiceJet can revive, a carrier like Go First? What are your thoughts?
Yeah, first, thanks. Good morning, and thank you for having me on the show. Frankly speaking, I don't think this is going anywhere. This offer is going anywhere. SpiceJet's board approved a fund infusion of about 2,250 crores. No money has come in yet, and SpiceJet has its own debt of, I think, over 6,000 crores to deal with. It's been making losses for the last 5 years. So, I don't know if SpiceJet's offer is credible at all. I believe it also made an offer when Air India was to be sold, and then I think its chairman later on said that he made the offer just to stimulate interest in the Air India sale. So, I mean, there's an issue of how credible this offer is. They don't have the money. They've been making losses, and they've got their own debt to deal with. Moreover, SpiceJet, though its market share is about 4% or so, but it's still a going concern. Go First hasn't had any operations since May this year. Most of its aircraft have been repossessed by the lessors or are in the process of being repossessed. The CEO has just resigned, saying that he can't revive the airlines. A lot of staff have left. And those that are there haven't been paid for 6 months. I think that most of the slots have also been reallotted. So what is there to buy, really? I don't think Go First has any substantial assets. It's not a going concern. So even if this were to happen, I think SpiceJet would take on a truck full of trouble that I doubt it would be able to deal with.
Right, do you think perhaps SpiceJet could look at, getting in more investors on board for this acquisition if at all this goes through? Do you think that is a possibility?
Well, I mean, would you put your money in this kind of transaction? Suppose you had money to invest. Would you invest? I don't think I would. Go Air, unfortunately, Go Air was a good airlines. They were profit-making airlines, and I think the trouble with Pratt and Whitney's engines really put that airlines out of business. For 3 years running, almost one-third of their fleet was grounded because Pratt and Whitney didn't have engines, and then they lost the Singapore arbitration. They lost in Delaware, but they've refused to supply engines. So even if you get on more investors, really, I mean, you might as well start afresh and just focus on SpiceJet. If you want to, revive SpiceJet, I think that should be the priority rather than acquiring an airline that is not just bankrupt but hasn't had any operations for the last 6-7 months.
But SpiceJet has gained market share. If you see the November market share in comparison with the previous month, it has gained market share 6% or thereabouts. Do you think with the recent announcement of fundraise, the airline could be on path to revival and getting back to growth trajectory here on?
Well, I mean, certainly its stock price, has improved in the last few months, and especially in the last couple of weeks. And that is an anticipation of the fund infusion. Certainly, if it can manage its finances, SpiceJet is not a bad airline either. I mean, it was doing very well. It went into financial troubles and it started making losses. And as it has in the last 5 years, part of that can also be attributed to COVID. But then everyone was affected by COVID, including Indigo, which continues to be profitable. So I think the priority for SpiceJet and its board should be to get the airlines back on rails rather than look at an acquisition of an airline that has ceased operations.
Right. What would it take, what would it take for, the revival of Go First? I mean, here on, because, most of its aircrafts were leased, right? So, lessors are waiting to take back those aircrafts, and it's obviously stuck because of, the involvement of Resolution Professional, and given the fact that it is going through the bankruptcy process, right? So, my question to you is, what would it take to revive an airline like Go First? Or do you think it's, lost cause and perhaps going the way how Jet Airways turned out?
Yeah, I think Jet was another story, but as far as Go First is concerned, at this point of time, I don't think there's any chance of reviving it. The government of India has signed the Cape Town Treaty, under which lessors are allowed to repossess aircraft, engines, etc., in case of default. Now, India hadn't given legal force to that accession to that treaty, though that had happened in 2008. But in November this year or October this year, the government, under pressure from the lessors, issued an ordinance amending the bankruptcy code, the IBC, and exempting aircraft engines, airframes, and helicopters from the protection that the IBC gave to assets of a company that had initiated insolvency proceedings. So what that means is that before this ordinance was issued, if an airline went into insolvency proceedings, its assets were protected from the debtors, including the lessors, and the lessors could not repossess them. What was happening was, the impact this was having on the aviation sector in India was that lease rentals for the other airlines were going up, were going to go up. And in fact, because of this great risk that lessors faced of not being able to repossess aircraft in the event of default, not only was the risk going up, which would mean the rentals would go up, but there was also a possibility that they would be very reluctant to lease aircraft to other Indian airlines who didn't have any of these issues. So now, once the government of India rightly gave effect to the accession to the Cape Town Treaty, Go First does not have the protection of it had earlier, which means that it's going to lose its aircraft as well, unless the lessors are paid off. So really, you have an airline that doesn't have any operations, it doesn't have a CEO, and it doesn't have any aircraft. The aircraft that it still has need engines, which the engine manufacturer is refusing to supply. So really, unfortunately, a very good airlines, but I don't think there's any chance of reviving it.
All right, slim chances of revival for Go First. With that, thanks a lot for taking out time and joining in, Dhiraj. It was a pleasure chatting with you this morning.
Thank you, likewise.
Right. Well, going back to Sacchitanand then. Sacchitanand, since we're talking about SpiceJet, 20% kind of an up move coming in yesterday. Over the last 6 months, the stock has literally doubled. And we have a query also coming in on SpiceJet from Naveen. How would you, trade into this counter right now?
Well, almost after, 1.5 years, this stock is now trending confidently above its 200 weekly exponential moving average support base. So I think keeping a stop loss somewhere close to around 56 on a weekly closing basis, it is still a good, stock to accumulate. On the higher side, there is no major resistance before 85. And if you look at the pattern target, the rounding bottom formation, which was established at around 50 levels, it is also indicating a price target somewhere close to around 98. So I think going forward, the stock can be accumulated. One needs to keep a stop loss on a weekly closing basis below that 55 mark. And on the higher side, 85 to 98, I think these are the probable targets.
Right, that was about SpiceJet. But I also want to get your thoughts on a Vedanta. It has declared a second dividend for FY24, and of course the board will also be considering fundraise plan today. And if you look at the shares of Vedanta, the stock has done fairly okay over the last 5 sessions or thereabouts, and it has seen a kind of an uptick in the last few days. But it is still a way off from its 52-week high, right? Vis-a-vis other metal counters, how is Vedanta looking on the charts now?
Well, certainly for the last 2 months, the trend seems to be improving. The stock was underperforming. We saw a very strong, consolidation base getting established and reconfirmed at around 220, 235 zone. And from there, we have seen a good lift off. Now, if you look at the immediate structure, it has managed to sustain above its 200-day exponential moving average, which is placed at around 256. But with the weekly resistance somewhere close to around 265, 270, I think this will be a level to watch out for. In case if the stocks starts trending above this particular level, then we may see a very strong rally, towards 300, 320 kind of a zone. But as of now, I think it's better to be a bit cautious. We've already seen a strong run up. 270 looks like a resistance. So probably the stock may see or get into a consolidation mode. So we are not expecting any major drop, but a consolidation, a decline towards 250 would be a good level wherein the stock can be considered even from a trading perspective. So as of now, in case if someone is holding on to the to existing long positions, then they can keep a stop loss somewhere close to around 242.
All right, those are the levels to watch out for on Vedanta. But let's take up some viewer queries that are trickling in this morning. Mukesh Oza wants to know your thoughts on a Hudco, whether it's the right time to invest. Look at the stock. In the last 5 sessions, it's up 20%. Time to chase momentum here?
Well, the stock has recently displayed a breakout above its 2017 highs. And if you look at the momentum, the momentum has been very strong. We've already seen a rally from the base at around 85 towards 120 without any major correction. So I think for the last 2 trading sessions, we have seen some muted action. A consolidation would be a healthy sign for this particular stock. But from a momentum perspective, the momentum will only fizzle out in case the stock starts trending below 96 levels. So probably, on a decline up to 105, he can accumulate this particular counter. Overall, if you look at the pattern and the major targets, they are placed somewhere close to around 135. So the headroom is available. The stock just needs some time-wise consolidation. A decline towards 105 would be a good opportunity, and he can review his position at around 135.
All right, look to buy on declines at around 105. Hope that answers your query. But want to get your thoughts on the likes of ONGC and Reliance Industries, given the fact that government has slashed windfall tax on crude to 1,300 rupees per ton from 5,000 rupees per ton. Reliance. In fact, we have a query also coming on our feed, wherein Yagnesh wants to know whether or not the upward move will continue or it could see some consolidation. So, on the charts, also in reaction to this particular news flow, where do you expect these two stocks to head from here?
So for Reliance, we are expecting that this particular rally would continue towards 2580. So we have already seen a classic V pattern breakout at around 2480. So I think the base is very strong near to that particular level. So one may continue, holding on to this counter with a stop loss at 2480 and review positions when the stock reaches around 2580 zone. If you look at the monthly structure, of Reliance, it is getting interesting. In fact, its monthly ADX is trending close to around 2340. Once we have a breakout about 25 levels on the ADX, that will be a good indication of a super trend. So I think, it is not only about chasing momentum, but I think positionally one can retain this particular stock in their portfolios. When it comes to ONGC, again, the stock has been a relative outperformer. For the last few weeks, the stock has displayed some consolidation here. On the higher side, it has been facing a lot of supply pressure at around 205 to 206. So I think the trend will only gain momentum once this particular level is surpassed. And on the lower side, it has a very good strong support at around 190. So probably this is the range wherein the stock may continue to oscillate, but the strength and the momentum can only be visible once this mark of around 206 is breached. And I would recommend chasing momentum after this particular breakout.
All right, that's the view on both Reliance and ONGC, but lots of queries trickling in on an IRCTC. We have Jay Lakshmi who wants to know your thoughts on that. We have K Reddy who wants to know, what to do with this particular stock. Yesterday, it has had a very good run. I think 20-month high was where it was at. Going forward, more upside, higher highs?
The trend is very strong, but I would like to give a disclosure that yesterday we have recommended our clients to, book profits from this particular counter because we had recommended it at a very good, strong, near to that base of around 660, 670 zone. And the stock has delivered a phenomenal return in the last 4 months. But if you look at the overall acceleration, we may see some pause here. A corrective is something which will be necessary for the stock to again, to come into that buying radar zone. But as of now, the momentum has been very strong. There are multiple, hurdles at around 910, 880 kind of a zone. So probably we may see, this particular momentum getting exhausted there. Correction is something which will be necessary for this stock. The major trend still looks very promising. Eventually, we see this particular stock, scaling towards 1160. But I think a decline would be necessary. And in case from a trading position, I think 840 would be a base wherein the stock can be reconsidered from a momentum perspective. But as of now, 880, 910 looks like a supply zone.
All right. There could be some bit of a fatigue there on the charts as well. But, quickly, one or two more queries to go. Juturu Pawan wants to know your thoughts on an HLE glass coat. Stock hasn't done, anything, so to say, has been rather sideways. If you look at the 1 month chart, it has still given 2% kind of a return, but last 5 days it has literally done nothing. Any view here?
Well, the price action has been clearly, bearish, but for the last 2 months, the stock is, trying to make a high top, high bottom sequence or a bullish sequence. The sequence will only unlock once the stock starts trending above 550 zone. So from a short-term perspective, I think this will be a level which he should watch out. And once the breakout at around 550 is established, then probably we may see an extended rally towards 580. But as of now, since the sequence is on the bearish side, I would rather avoid building any fresh long positions here. But on a breakout above 550, some trades can be initiated from a momentum perspective.
All right, that's the view. Hope that answers your query. One last query then. Satya CK wants to know your thoughts on a CESC for the long term. What are your thoughts?
Well, the major move has already unfolded. The stock needs a correction here. For the last few trading sessions, we are seeing some reversal formations here. A correction towards 110 will be necessary. The stock can be accumulated on a decline right up to 102. So overall structure is healthy. Breakout momentum has been very strong. A pullback is necessary for the next leg of the rally to unfold towards 155. So keeping that in mind, I think in case if the stock starts slipping and trending towards 110, 102 would be a good zone wherein the stock can be accumulated from a portfolio perspective.
All right, that's the view on CESC, and this brings us to the end of the query segment. But Sacchitanand, before I let you go, what would you like to recommend for our viewers this morning?
So I have three trading ideas, one on the long side, two on the short side. Yesterday, we have seen a very strong breakout in McDowell's after a good, healthy consolidation of a few trading weeks. We are expecting that this particular momentum that was generated yesterday could extend towards 1130 and eventually towards 1165. From a positional perspective, one can keep a stop loss at 1088. Disclosure would be that we have also recommended this particular trade setup to our clients. On the short side, we saw LIC Housing Finance, showing some signs of fatigue. It has slipped below its 5-day exponential moving average yesterday, and we are expecting that there could be a corrective in motion. This particular move can extend towards 522 during in today's trading session itself, but positionally we see it slipping towards 510. So we are recommending building short positions here in LIC Housing Finance with a stop loss at around 530, 542. And Indigo, has seen a lot of supply pressure at around 3000 levels. Even yesterday, we saw a good confidence built up. Here, we are expecting a move towards 2920 on the lower side, and that's why even here, a conditional sell can be initiated on a breakdown below 2970, keeping a stop loss somewhere close to around 2996.
All right, those are the recommendations coming in from Sacchitanand. With that, Sacchitanand, thanks a lot for taking out time and joining in and sharing your thoughts with us.
Thank you, ma'am.
Well, with that, we've come to the end of this edition of Morning Trade. But before I go, just want to, inform our viewers that the block deal of Apollo Tyres has taken place, and that's according to CNBC TV 18. And aside of that, we have three IPOs opening up for subscription today. They include Happy Forgings, apparel firm Mufti, as well as RBZ Jewelers. So log on to moneycontrol.com and see what analysts have to say on whether or not you should subscribe to any of them. But with that, completely timed out. Thanks a lot for tuning in. Stay tuned to Money Control because coming up next is Opening Bell.